What's up, members? Welcome to another lesson. This lesson is a continuation from lesson 3. So if you are on this video and you haven't watched the other video, I would advise you to go through lesson 1, lesson 2, and lesson 3. So this lesson will make more sense to you. So in this lesson, we are going to look at how to identify a valid order block, how to know that this order block is valid, or how to know this order block is going to work. By the way, I would like to give you a quick definition of an order block. So an order block is simply a collection, is simply a zone of collection whereby simply a zone of correction before a price creates a swing. In this case, let's say this is the origin of the price. Before this price goes, or instead of this price just coming here, moving like this, moving like this, moving like this, moving like this, it's going to, price moves in zigzag, goes up, comes down, goes up, does this, and then starts coming down, and then does something like this, right? Just exactly what you're seeing, or what price is doing here from all this level. You see, price doesn't just move straight like that. It moves, it goes up, it comes down, goes up, and comes down. So there is this thing whereby whenever price is in your point of interest or wherever, it's going to, before it makes that move, that big swing, it's going to correct. It's going to correct. The reason why price will correct, I will tell you, but price is gonna correct. It may just be few corrections, and it's gonna go up, come down, make some few corrections, go up, come down, make some few corrections, go up, make some few corrections, and then go up, make some few corrections. So price is gonna move like this. So a very good example is what you are seeing here. Right? The price will always make collections before, as it is moving in that desired direction. So you can see the first correction is just down here. The second correction is just here. The third correction is just here. These corrections are actually what drives the market. Actually, price is just sometimes they're also called liquidation. Prices actually come here, spending some time. That place is called a point of liquidation, where price is coming to accumulate. So you can see what is happening here as well. And then you can see also a big liquidation, liquidity coming here. So remember, I said liquidity is just an ability of a price or a commodity to be sold or bought. So actually, when price starts accumulating, it's actually making a decision whether to keep going up or to go down. Right? You can also see here, it's actually making a decision whether to keep going up or to go down. Same thing here is actually making a decision whether to keep going up or go down. In this case, it has gone down. And then you see that most of this prices where price is actually making a decision, they're always prices that are going to create some sort of impact on the market in the future. So if you're going to extend this area to this side, you will see, you pay attention to what happened here. Why? It's because there was some sort of, this is actually an order block, right? If you extend this line to this side, right, you see something that price actually reacted to this area. Why? Because in the future, in the previous days, there was something that happened. So you can also see in this zone what is happening. Price is going to react somehow, and this order block, sorry, I don't know how big it might be, but price will always react, like you can see here, right? Price has always reacted. So there are so many order blocks that are going to occur as price is actually moving in that direction. So many. So let's get back to the drawing. So you can see here that there are so many, plenty of order blocks that have actually happened. So which order block is the order block that we trade? Is it this? Is this order block? Is it this one? Right? Is it this one? Right? Is it this one? All right. All these order blocks, they are very valid and they're going to bring impact to your trading. Like you can see all these order blocks that are here, have they been respected? Or which order block has given us the impact that we wanted? Because in this case, we would say, if we're using this order block, if we were to enter a buy here, we could have been stopped out, right? If we're entering a buy on this order block and put a stop loss just below, yeah, we would say this trade could be would pay us money, right? But if we were also to trade using this order block, you see, we would also still make some money until you got stopped out here. Oh, still here, you see? So which order block is valid that you need to trade, or which order block do you have to use for that trade to be successful? And that's the exact thing that we are going to talk about in this video. So let me give an example of this area. We have the first order block down here, and we have the second order block here, and we have another order block here. Yeah, I won't even go far because the rest will not make more sense. But yeah, you can see that the first order block, boom, has been blocking. In this case, we're not taking this order block. So we're actually gonna put an X because this order block has not played out, right? So I'll actually put something like this because this has not played out. And then you see the second order block. Boom, price has come here. And then if you are taking a trade, boom, you take a trade, you put your buy here, and then let's say you take profit somewhere here, and then you see what happens. Price had to come back, take you out. This means this order block wasn't the valid one. In this case, you see the last order block. You enter your trade here, your buy or your sell, you put your take profit somewhere here, and then you see what happens. You see it prayed out, right? And then the question should be, why did the first order block not work? Why did the second order block not work? And why has the last order block worked? You know, so in this case, this order block is not going to work as well. And lastly, we have one order block that has worked, and this is this order block, right? So the secret should be why the last order block, or why choosing this order block as a valid one. So in this case, let me just take you somewhere so where we can we're going to discuss a few things. By the way, before you need to understand the concept of order blocks, you need to understand this concept of mitigations, right? This concept of mitigation. So if you guys understand mitigation, simply mitigation. Yeah, so I'll not talk a lot about mitigation, but I'll just explain a quick one. A mitigation is whereby, I'll give you an example. Remember, the big banks are the ones that move the market, and are the ones that decide price, are the ones that are trading the market big time. So you see, let's say now price is actually accumulating, forming a liquidation, and then in this case, people are actually thinking, where should people actually fighting? Where should the market go? The buyers and the sellers are in control. People actually making decisions. Where should the market go? But everybody knows that no matter no matter how we can fight, this commodity is gonna go up. But the big banks will be like, okay, fine, it's gonna go up. But what we're gonna do, we're gonna what they will do is that we would want to light this trade on our own, just only us without anyone. What do we do? Then they're gonna come here. As soon as they come here, what do? They're going to put more buys, right? They're going to put more, pump in billions of money in this trade. So remember, when the demand is high, prices do what? Go up. As a result, price is gonna go up. As soon as it just goes above here and takes out all the people, right? Remember what has happened here. We have actually broken this level, which is break of structure, right? Pay attention, right? I've actually broken this level, right? So as soon as they pump in more money and move the market to the upside, this is what happens. They break the market, right? And then, okay, let me say, okay, let me say in this way. Okay, fine. yeah, um, price is actually trading here, 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 forming a liquidation. And then what do? First, they're going to pump in more money. And then we call it a sponsored trade. They actually sponsor a trade so that they can move the market in the wrong direction. Why? Because they want, the first thing, they want to catch people in the wrong direction. The second thing, they want to take out the people who got it right, right? So the other people might have entered a buy here because they know that this trade is going to go up. So their stop losses are just below here. What they'll do, they'll pump in more money and place a trade. Remember, when there's a lot of demand, price is going to go in that direction. So they're going to do that, right? As soon as that they do that, they're going to break this high, this low, right? Which is the break of structure. So yeah, currently this is the break of structure. They've actually broken that one. So take this, take what I'm saying as this accumulation, as what you are seeing here. Price is going to accumulate at the one price, at the one price, at the one price, and then boom, they just do that just to take out people, right? In this case, they're actually breaking this lowest low, right? Yeah, yeah, they're actually breaking that lowest low. So this is actually what is called liquidity grab. They've actually created liquidity here so that they can grab people in the long side, in the long direction. So what happened here? The liquidity that was created has been grabbed. People who actually thought that it's time to sell have actually sold, right? But the sale is not gonna go far. People actually that who actually thought this is actually a buy trade, they've actually what? They've actually sold. They were actually in a buy. So I'll give an example. Somebody said, okay, this is gonna buy, and then they enter a buy. Okay, they enter a buy. Maybe they take profit somewhere here. Their stop loss, I would say maybe here. And then you see what happened. They're gonna be taken out, right? And then people who actually thought that this is a sell, they'll laces themselves sold here. They'll put their stop loss maybe just above here. And then yeah, they'll say, we're going to take this trade to the downside. So as soon as they have taken out everyone, now they know by the time they have they pushed the price to this side, they must have taken everyone out, right? And if you also pay attention, you find out that this zone must be this where the market is reversing must have an area of interest somewhere here, right? Like what you're seeing here. This is actually an order block, right? You see, this is actually an order block. Price just came here and reversed to keep on going down. But we're not talking about this one. We are here, right? We're just here. As soon as price break this line, yeah, as soon as price has broken this level and they have actually pumped in money just to move the market in the wrong direction. Okay, just wait a little bit. So as soon as they pump in more money to move the market in the wrong direction, they are going to come in this point, their point of interest, as what I've showed you from that other side, right? This thing, right? Because that was their interesting place. They'll be like, we can't buy here because we can't buy when price is still higher. We would like to push that price down so that we can buy it at a cheaper price. So you see, as soon as they just move their price down here, what do? They are going to put in more billions, maybe five times billions than the ones that they pumped in to move the market down. So they're going to enter a trade here with just a stop loss, with just a small stop loss, put in a lot of money to create a lot of demand. So in this case, why do they do this? So I would say they're going to put their take profit somewhere around here, right? Somewhere around there. So you see, they have actually pumped in so much money. Now, as they have entered a buy, this trade must have been going in negative. So let's say maybe they entered somewhere here, the big banks, right? They entered somewhere, yeah, I would say maybe they entered somewhere. They started pushing the market from there. They actually put a lot of money to with their stop loss, maybe big banks. I don't know where they put their stop losses, but something like that. So now this trade is actually going down. Now their trade that was in sell is actually in negatives, but the trade that was in positive, that is in buy, is actually in positives. Now they're pushing the market to the upside. So what do they do now? They are actually wanting to take out these people on the other side, right? These people on the side, to take out their sales, people who actually um, thought it's a sell, right? Remember, I said some people actually sold, some people actually bought. They want to take out these people who actually thought it's a sell. So you can see here, price has actually broken this structure here, right? Has actually broken this structure. They just want to take out the people that actually sold. The reason is they want to be alone in the market. They want to be the big banks, the big boys in the market. So because now they've taken everyone out, they've taken the buyers out, they've taken the sellers out. Now what they want is they want to balance their trade. They want to go take this trade back into the price so that they can actually close this sell trade that they took, so that they don't close in losses. So now they're going to pump in, they're going to because they have taken out people who are actually selling, demand is actually going to is going to be a lot of supply, and then price is going to go down. As price is going down, that's where you look for demand and be like, okay, fine. Now you can see they can't sell, they can't sell, they can't start. I mean, they can't continue buying their prices here. Why? Because you can see their trade is still they haven't still they don't want us to close their trade in losses, so they would want to push the market down. So now you see, now they have pushed the market down here. Now that trade must be in positive, like take it from here. Okay, right? Somebody will say, okay, maybe I'll use this order block, but you can still do the bank, the big banks, their trade must still be in. Now it's in, let's say, yeah, it's in positives, but still they still want to buy the lowest price. These people, they don't want to buy cheap, they don't want to buy expensive things, they want to buy cheap stuff, right? And then as a result, you're seeing that the market is now coming in the lowest order block, which is this one, right? The lowest order block, which is this one. And then they're now satisfied, they're entering, they have closed actually this trade. As soon as they close these trades, they're entering with more billions. As a result, they push market to the upside. So crazy like that. So crazy like that, right? Because they are the market makers, right? They are the market makers. They decide what they want, right? You see what I told you. You see, they push the market crazy to that side. So the whole essence of us trading, we want to trade like the big banks. We want to trade, we want to think like how these people think. So now you must have understood which order block is the right order block to choose, or how to choose the right order block. In other ways, you need to learn how to use this tool called the Fibonacci retracement tool. Yeah, this Fibonacci retracement tool is actually available on every trading platform, including MT4, whatever. So how do you trade how do you identify a right order block? By using the retracement tool. You need to, by the way, if you don't know what a Fibonacci retracement tool, you need to watch some videos on YouTube so that you can understand why this tool is used in Forex, and why is it important for you to know how to use it, because you can't just use something that you don't understand. And I'm not sure if I can make any videos explaining about it, because that's something you can do on your own. So whenever you're identifying an order block using, let me just remove what's here, remove all drawings, right? So whenever you want to identify an order block, make sure that your order block, right? If you are looking forward to buy, right? Make sure that your order block is always below the 61%, right? Make sure that your order block is always below the 61%. Don't have to write that, just write it, right? So in this case, I'll take my Fibonacci here, right? I'll take my Fibonacci here, and I'll put from the lowest, right? From the lowest price to the highest price. like that, right? To the highest price like that. So the next thing is um, now I've actually moved my Fibonacci from the lowest to the highest. So in this case is for me to just focus on order blocks that are below the 61. So this is actually the 61. So for me, I'm only interested in looking for order blocks that are below the 61 level. So in this case, I'll push this to the downside. So whatever order block that is above here, I'm not interested. Like you can see, I'm only interested in order blocks that are below. So in this case, remember, now I can remove my Fibonacci because it has actually helped me to identify the 61 zone. So in this case, this is my current order block. As a result, I'll just refine my setup so that I can consider that as my order block. So you see what happened? Price actually came exactly in that zone. That's my order block. So I'm pretty sure I've made myself clear. So I'll just give a last example of an order block, how you can identify an order block. In this case, I'll have to look for somewhere where you can look for an order block, but those are the two ways on how you can validate an order block to be what? To be yeah, to be traded successfully. So I'm trying to look for an example, another one, so that you guys can relate whenever you're identifying order blocks. Yeah, maybe I'll give an example of I can't find where. Okay, I'll just take from what I've already traded so far. Okay. All right, so in this case, I'll actually give an example. Okay, fine. This one. This is actually a very interesting order block. I think we have used this example multiple times. So, yeah, this is an order block, and this is an order block. Prices actually reacted in this area, and this is an order block. And of course, this one is also an order block. And you can see prices actually reacting in all this, but you can't trade every order block. You need to identify that perfect order block that you need to use. So in this case, when you come here and put your Fibonacci from the top down, you will now see that this is your 61 level. So I'll just identify my 61 level and above. Why? Because we're actually looking forward to sell. So I'll remove every order block that is down here because all these down order blocks are not necessary. So now in this case, I have 2 order blocks. You can have even 3 or 4 order blocks in that area. So the same principle, please use the same principle. Remember, this is liquidation. Price is actually deciding whether to go up or go down, right? And then remember, what is this? This is actually liquidity grab. We're actually grabbing these lows, right? These highs. As price grabbed these highs, it actually pushed it to the downside. And remember, there's this sponsored candle. They've actually pushed the market in the wrong direction just because they want to trap people in the wrong direction. Just exactly what I explained there. And then they'll push the market up and then they'll calm down so that they can close their orders in profit. So in this case, let's say they actually started selling here, right? They actually started selling here. So I'll put this. This is just my imagination. They actually started selling here, but we should take it as if they want to sell, they would start whenever they've actually sponsored. They've actually sponsored money. There will always be a crazy movement, like all this crazy movement. I would say it's a sponsored one, but they're always looking for a perfect place where they don't want to close in sell, they don't want to close in losses, and they don't want to also close on break even. They want to close in at least a 3% profit or 4% profit. So I would say maybe this level, and then you would consider up here, right? what's left. So in this case, I'm taking this one out, which means I'm no longer interested in that area. So you can see up here, which means this is actually my valid order block. What do you do next? You know what? Just enter sell and your stock profits and your what? Your take profit just down there. Wait for magic to happen. You're gonna see your count doubling. If you use this strategy, guys, you're going to double your counts so massively, and the reward ratio on these trades is actually so big. It's actually so big. So in this case, this is a 1 to 19, which is almost 1 to 20. So I've actually explained the principle of order blocks. A very good example of the same thing that I just explained, guys. Same thing that I just explained. A lot of liquidation. What do? They sponsor money. Why? They sponsor money. They want people to be trapped in the long side. As a result, what do? They push the market in the direction that they want to break structure. Remember, once they break structure, just know that the market is going that way. By now, these things must have started making sense. So as a result, now they want to come back so that they can close this buy that they took. They want to close it, and they want to close in a profit. So in this case, this is actually the trade that I'm looking for right now. So I've actually identified this zone because that's my order block at the moment. That's the only order block that I'm looking for at the moment. If price comes in this area, I'm going to sell massively. Why? Because it is also above this break, right? I'm pretty sure that the banks by this time they would have closed their trades. Okay, so guys, I've explained how to choose the correct order block. If you haven't understood that one, guys, just play the video again. But I always try my best to make myself clear. You can always give me feedback on the WhatsApp group. Otherwise, have a good day.